Hello, friends. How are you? My name is Mike. This channel is Health and Wealth. Thank you so much for joining me today on a crazy episode where we talk about what if we put $50,000 into ULTY and what would become of that money. Now, just to put a big, huge warning out there, this is a very risky maneuver. And in fact, it's so risky, you might lose some of your money. It depends how the market is, though, right? So right now the market is kind of topsy turvy. It's up, it's down, mostly down for the last couple of weeks here, and it's caused a lot of turmoil. Is a good word. A lot of the fear mongering, the people that talk about only downside, right? And so that happens a lot in down markets. And you know what? It's to be expected. And you know what? It's a little bit realistic too, isn't it? Right? It's important to understand that all of this has risk, all of it has failure, all of it has the potential to fail, but it also has the potential to succeed. So, a comment in my video said you should make a video that says, "What if I put $50,000 in? What could I expect?" Let's talk about the plus. Let's talk about the minus. Let's talk about the good, the bad, the ugly of that thought process. Now, for me, I am not putting my money where my mouth is on this one. It's just a generic what if video. And I think it's important that we understand that you should probably seek financial advice from a professional financial advisor out there who would definitely not tell you to do this. And also, it's important to understand the risks of everything and understand that your 50 grand could just disappear, right? Depending on what happens with the ETF. So I feel like I've put enough warning out there in the world in the first little minute of this video here, 2 minutes of this video, that I've covered my butt, and I want to talk about some of the pluses of this. And I've got a bunch of screens for you to take a look at here. Mostly going to be talking about positives here, but again, let's be real, right? Let's be real. Okay, first things first is I have Twitter open here. I like this first tweet that I read here. Option one: buy a degree, invest $100,000 into education, kiss that money goodbye, hope to get hired and earn enough to pay education debt and life expenses back. Or option two: buy a salary, invest $100,000 into ULTY, kiss that money goodbye. Right? That's a good way of thinking about it. That's invested. Receive 52 paychecks a year starting immediately while playing Xbox. Yeah, that's true, right? All right, fantastic. So what I've got here, you can see all the screens I have open. I've got a couple other ones in there as well. Let's take a look at ULTY stock or ETF itself right now, trading at $5.67. If you go all the way back to the beginning of this, it used to be trading 71% more than it is right now. And this thing has been out since March 1st, 2024. So a year and a half now it's been out. Now, what we want to do is just make sure we understand that there was a strategy change. So until March of this year, right about here, it was the old strategy. Okay. The old strategy wasn't working. The team at Yulmax changed course. They put up a different sale, and now they've changed things around. Okay, so since that change, which was around March 12th, March 20th, something like that, right in that 8-day window there, you can see here that the fund has since kind of been around the same. Now there's also market downturn until April 4th of this year. So from April 4th to now, the share price is no longer going down, even though we've had a pretty tough market over the last 10 business days. So in that time period, the share price is up 4%. Now, for me, I'm going to throw this out there and reel it back in a second here. I don't care about the share price because what ULTY does is different than a lot of stocks out there or ETFs out there. It pays a distribution every single week. Okay. Now that distribution changes depending on how much the Yield Max people make in terms of premiums collected from calls and puts. All right. Here are some of the positions, not all. We're going to go over that a little bit more in depth than usual in this video. but that's how they make money. Now, what I want to do is just kind of share with you the distributions. If you're new to Alti, which I believe most of you probably aren't that are watching this, but if you are new here, my name is Mike. I cover high yield, distributing ETFs, mainly focus on the ones that I currently invest in, just because I like to talk about things that I'm invested in. So here's all the distributions. You can see anywhere from 8 cents all the way up to 11 cents, but averaging around that 9 to 10 cent mark each week since the big change, which happened again in March. So you can see right here, March 5th, there was a bigger amount here, and that's because they used to pay every 4 weeks. But again, they changed their strategy. They made it a weekly pair, and since then, it's been a real hit on the market. Done very, very well. I want to talk to you about a couple of words called total return. That's what we're getting here. Is we're getting return of capital, our money that we put in. We're getting return on that money. Okay, so far so good on this strategy. Look at all those payments of 10, 11, and then 9 and 8 cents. It's a lot, right? Let's go up to here. I actually calculated all of it. And since they made the change in March, it's paid out $4.32 in distribution. So let's go back to that chart one last time here. And so since March, they paid out $4. Hold on one second. $4.32. Oh my goodness. Let's go from that date, around that date, March 14th till now, down 13% or down 86 cents. So you've got $4.32 coming back. This is called return of capital. Your share price is down from that particular date, March 14th. I just picked it out of a hat here, but you brought in $4.32, give or take 10 cents, depending on the week that I chose there. Does that make sense? So down 86 in share price, 86 cents in share price, but up 432 in distribution. You do the math, right? It's in the $3.80, $3.70 mark profit that you've brought in during that time. So that's pretty cool to see. Every single week they are paying, around the 9. They did have 5 weeks in a row of 10 cents, but then the market went down a little bit. They probably didn't win a couple of their trades, and you got 9 cents, which is definitely doable as well. I've chosen a couple of stocks here. Now, the reason I've chosen Robinhood is because it's quite volatile. I've also chosen Rocket Lab, and I've also selected 6 months here. Now, these are just 2 of 21 different positions that are inside of the ULTY folder right now. Here is what's inside the ULTY folder. I've highlighted all of the different company names. And what they've chosen, Yield Max people have chosen, are some of the most volatile names on the market, with the hope that these are companies that are going to go up in share price, not down but up. And so what happens is they buy shares in these companies. Each of this gold color here is the company, how many shares of that company they own, how much it costs to buy that. And then right below it, they have their calls and their puts. All right. So let's go to Robinhood, which is line 32 to 30, or sorry, 42 to 44 here. I'm highlighting it in blue. And so you can see they have a call for $108. This ends this next Friday coming up. But they also have a put for $92. So 108 for the call, put for 92. Why does this matter? So back before the strategy change, they didn't really do the put so much. So in a down market, the share price tanked, and you guys saw that on the charts, right? Now with these puts put in place, it's less of a tank, right? It still could go down for sure, but at least we're gonna make some money with that protective measure in place. Okay, so it's not a full lock or anything like that. It's not foolproof. It does prevent massive downswing, but it doesn't prevent the full downswing, if that makes sense. Okay, that put right there. So that's one example. And over on the right, you can see the amount of money they make from it. The minus sign, good. The non-minus sign is how much they paid out to create that put. I also chose Rocket Lab. These are 2 companies that I'm particularly interested in. Rocket Lab sitting right there. You can see the price that they paid for it. You can see all of their calls and puts, right? I'm not going to go through each of those. That's not what my channel does here. Yeah, so 21 positions right now in ULTY. They range anywhere from 15 companies that they trade on to all the way up to 30, depending on the market. If it's a good buying opportunity to buy that company, and if the implied volatility of that company is high enough to put inside ULTI, that's what they do. Okay. I found this chart right here, right off their website. You can also download the exact same chart. You go to ULTI over here on yieldmaxetfs.com. Scroll down past the holdings and download all holdings right there. This is going to allow you to do a larger examination of each of the positions. Just so you know, some of those companies I've never heard of, some of them I have, and I would never buy myself. But the reason that they're in this folder, in this envelope, is because of that implied volatility, which they hope, YieldMax hopes, will generate you and me income in terms of distributions that get paid out every single week. So far, so good. All right, awesome. Now, why is it risky? Well, because the market could go down. Those Rocket Lab and Robinhood, as examples, could really, really plummet. And that could really decrease our share price, right? These are the bad things that could happen. It's really important to know before you stick your money in what are the positives, what are the negatives. For us, we try and bank on a market generally going up, but right now it's kind of volatile times. And so that's why we've seen the last couple of weeks the share price is going down on things. All right, next. So I've got the dividend calculator up here. If you're just a regular person, this dividend calculator is called marketbeat.com. In here, you can plug in whatever ETF, stock, whatever pays a distribution or a dividend. You can punch that right in there. I've got individual stock. I have weekly because this thing pays out every single week. I have it set to drip. Drip just means that the shares are going to automatically reinvest for us. And I've also calculated 8,818 shares. Now, if you take that 8,818 and you multiply it by today's share price, which is $5.67, it gives you $50,000. Does that make sense? All right. So annual contribution, I'm saying nothing. That's not part of the game that we're playing here today. I do have a tax rate of 15% because that's what I would normally pay for tax. Up top here, whenever you come to the calculator and you plug ULTI in, it actually says in like the 120% mark, but that's not valid. That's not true. It's around 66% right now. Seeing as we're getting distributions hovering around the 10-cent mark, you multiply 10 cents times 52 equals about $5.40 in distribution, or right here, 525 is what I have. Okay, give or take a few pennies. Bob's your uncle. I also have expected annual dividend amount increase. I've lowered it because we have seen this with almost every single YieldMax fund since its inception that they get a little bit lower. And if you want to be more realistic than me, come in here, change this number to whatever you think is going to happen. Let me know, right? Is it going to go down 10%? Is it going to go down 20% annually? Let's hope not, right? Because that's not super sustainable if that was true. Expected annual share price increase. I lowered this one as well. Even though in an up market, the price of ULTI should go up. But we're going to play defensive here in this video. We're not going to play win, 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 rah, rah, rah. I want to make sure it's somewhat realistic to the real world, so that you take something from it. I have years invested. I have 20 years, and then I just hit the calculate dividends button right here, and we can scroll down and take a look at how much is $50,000 going to pay us if everything virtually stays the exact same as it has over the last 4 or 5 months. Okay. We now know that there could be downside. We now know there could be upside. This is if everything stays the same, and I want to make sure I'm clear. This is not financial advice. In fact, this is just entertainment. I can start juggling. Actually, no, I can't. I don't know how to juggle. So let's go take a look at the numbers here. Here's that 8,818 shares. Annual dividend per share is about $5.25. Annual dividend or distribution in terms of an ETF is $46,336. But the one that I care about, the one that you should care about, is after taxes, right? So if you got to pay taxes, plug in your own taxes above here, whatever it is you think your tax rate is. Mine's 15% from where I live. So $39,386. Pretty good. considering I've donated, as that tweet said, $50,000 into the fund. In just 12 months, I've already brought back $39,000, 386,000. Now, if I just let it ride, let it drip in year number 2, just in income, right? And that's what this is. It's an income play. I'm bringing money in. I'm leaving it for the first couple of years here. It brought in $70,000. So in the first 2 years, I had put 50,000 in. I brought in 109,700 back. Pretty, that's very impressive, right? We doubled our money plus some in just 24 months, hypothetically, of course, right? Year number 3, just in the year itself, if I just let it drip, it brought in $127,000. And then year number 4, 234,000 a year. Year number 5, 435,000, and then year number 6, $822,000 per year. This is incredible. Is it maybe a little unrealistic? I think it might be a little unrealistic, but it's definitely possible. Let's change this. Let's go expected annual distribution to be minus 10%. Let's go crazy here, okay? And then let's go with shared depreciation to 10% as well. Aye, right? Not looking good. Let's do the same thing though. So after tax 39 grand, after tax 66,000 in year 2, and then in year 3, 112,000 you're bringing in. At that stage, I can retire. And I mean, even after 10 years, we're talking $4 million with a lowering share price each year, a lowering distribution each year. Okay. Let's say though that the share price got down to this 2% or $2 sitting here. What could happen to your money? Well, they may end up doing something called a reverse split where they would go and multiply that by, I don't know, 25, right? And so if you had 100 shares, now you have 25 shares. That could happen, right? That definitely could happen. So for me, ULTI is strictly one thing. It is income. It's not about the share price. The share price can stay flat for the rest of my life for all I care. I care about getting 10 cents per share, 9 cents, 8 cents per share every single week for the rest of my life or until I choose to take that investment elsewhere. That's what I care about because it's going to pay me for life, right? So let's take a look. I got a couple more tabs here that I want to show you. Next one is dividendchannel.com. By the way, thanks for being here. Hope you hit the subscribe. My name is Mike. Hit the like, subscribe, share this video with your friends, and tell them that's not financial advice as well, okay? All right, dividendchannel.com. I plugged ULTI up top here, and over on the right-hand side, it shows you all the distributions it's done since March 14th. Down below here, I changed the date, though, from March to March 12th, 2025 to August 31st. And I'm comparing this to the VU. The VU is what everybody kind of compares everything to, right? The VU is, your dad's kind of income fund, right? So, right. So I'm comparing it to the VU. Now, black line is ULTI, blue line is VU. We put $10,000 into each in this example right here on March 14th. You can see that ULTI has come ahead here. The top one, this is the only one we're really going to talk about because this is us dripping shares back into it. The top one, you now have a portfolio of $12,885. You started with 10 grand 5 months ago. In the VU, which is what everybody talks about out there, that and your uncles, right, is at 11,620. So ULTI is beating the VU. You can see the chart here, right? This is probably April 4th right there, the bottom of the chart. But they're very, very similar on the downswing down there. And then they both kind of took off after that moment. So interesting chart for sure. I always like looking at that one. You can see for me, I am an investor of ULTI right now. I only have 565 shares. That's going to change on Tuesday morning. Should probably have an additional 50 in there. Right now, I am dripping this. It is at 7 shares every single week I get for doing absolutely nothing. It's amazing. One last thing. If you guys haven't seen this website, it's called yieldmite.com. It is one of the best websites in the high income yielding distribution paying ETF world. This is from Amy, who has a YouTube channel named Bad Financial Decisions. I Love this website. Let's go take a look at last week's results. So if we put $50,000 into ULTY, a couple weeks ago, you last week would have brought in $818.10 in distribution. So you can see weekly, monthly would have brought, if that continues, it's going to bring in $3,500 a month, or annually $42,541. And that's without tax, I believe. But if you go to the details here, you can see that change happened right in here, right? There's the change, March 12th, just like I had on my chart over there. And you can see the distributions are lower, but so is the share price. And also, these distributions were every 4 weeks. These ones are now every single week. Okay. Fantastic website here. I highly recommend taking a look at this thing. Everything about it is awesome. There's nothing wrong with it. And in fact, if you like this website, I encourage you to go over here and buy Amy a coffee or buy her a sandwich. Do that too. If you enjoyed this content, my name is Mike, and the channel name is Health and Wealth. I enjoy talking to you. Today is officially video and content number 43 of this month. I put the hours in, everybody. I hope you hit the subscribe and the like, and I hope to talk to you again in the near future. My name is Mike. This is Health and Wealth.